Hello and welcome to another episode of the Global Reset. I'm Prashant Nair. You're watching CNBC TV18 Prime. The big story this morning, US tariffs on Indian imports now stand at 50%. This, of course, came into effect yesterday morning, that is Wednesday morning. Duties that take India into one of the harshest tariff regimes in the world. So what does this mean for India's economy? But specifically, what does it mean for our exporting sectors? For millions of jobs tied to these sectors, like textiles, gems and jewellery. Joining me today in a bit shortly from now to discuss the impact are representatives from two sectors which are being closely watched for implications. We're talking about textiles, garments and of course gems and jewellery. Rakesh, Mehra, Chairman of the Confederation of Indian Textile Industry, to weigh in on the risks for labour-heavy textile exports. And Suvankar will be with us, Managing Director and CEO of Senco Gold and Diamonds, of course, bringing the perspective from the gems and jewellery trade. This is, of course, another sector which is squarely in the line of fire. But first, let me quickly set up the context. India now faces one of the harshest tariff regimes anywhere in the world. JP Morgan estimates India's effective tariff rate on exports to the US jumped to 34%. The effective tariff rate is different at 34%. It's different to the 50% headline rate because there are exemptions. Many sectors are out of the purview of tariffs so far. Now, 34% for India, the effective rate is second only to China and more than double what the ASEAN average of 16% is. JP Morgan calculates that about 1.1% of India's GDP in the form of domestic value-added exports to the US is exposed to these duties. Textiles, machinery, gems and jewellery are some of the more high-risk sectors, both high value-add, both labour-intensive. For textiles, the story is especially grim. Tariffs at 50% would wipe out India's pricing edge in categories like cotton, bed linen and jerseys, opening the door for Bangladesh and Vietnam to gain market share. The gems and jewellery sector too is hit hard, with nearly half of its revenues coming from exports. A 50% duty could sharply dent demand, threatening a major employer across states like Gujarat and Maharashtra. Now, the cost to growth could be material. At a 50% tariff rate, India would not just see slower exports, but outright market share losses, threatening jobs, consumption and livelihoods in labour-heavy industries. India had hoped to attract fresh investment on the premise of lower tariffs compared to the ASEAN peers. A punitive tariff regime blows a hole in that thesis, and it risks deterring both FDI and technology transfer as well. Now, on the external front, external account that is, India's current account deficit, that is CAD, is modest. It's about 0.6% of GDP. But capital inflows have already dried up quite a bit. JP Morgan warns a sustained tariff shock, that is, this 50% being around with us for some time, could widen the CAD towards 1.5% and actually aggravate balance of payment pressures. Reserves of $600+ billion offer some cover, but not immunity. The rupee, of course, has been heavily reliant on portfolio flows. The rupee against the dollar is near all-time lows. The portfolio flows, by their nature, are volatile, and a prolonged tariff standoff could test that buffer. Now, the real blind spot, and this is something which, there's no way to tell, but one hopes we don't go there, is services. India's IT and business service exports to the US are 3 times larger than India's goods exports to the US, nearly 6% of GDP. They remain, so far at least, untouched. But any move on the behalf by the Trump administration, by the US, on services would really strike at the heart of India's growth model. And finally, the stakes go well beyond tariffs. At issue is India's ability to integrate into global value chains. Without a trade deal with the US, India risks not just lost exports, but diminished investment and slower job creation as well. That is, a short sort of read-through of the economic impact which may come through. But from the shop floors of Surat's diamond factories to the looms of Tirupur, the tariff shock could ripple far beyond just trade numbers, which is why voices from the industry matter more than ever. Let me actually, as I said, bring my two guests in. Rakesh Mehra is chairman of the Confederation of Indian Textile Industry. Suvankar is MD and CEO at Senco Gold and Diamonds. Gentlemen, great to have both of you here. Thank you very much for joining us. Prashant, this side. Mr. Mehra, if I can start with you, tell us, is the assessment that a broad headline assessment that I put out, especially for your sector, textiles, garments, is that accurate? And where are we now with these tariffs which have already kicked in?
Well, good afternoon, Prashant. Thanks for having me over. So, we are on a roller coaster ride. A month ago or 2 months ago, we were talking of China plus one and we are going to get everything out of it and our business is going to grow. And then things started changing. Yesterday, we were little happy that maybe things are there's a thaw in the relationship and things will improve. But this morning, again, it is different. So I would put it as a real roller coaster ride. We don't know what is going to happen in the next few hours. So having said that, as you have rightly put, India, our textile and apparel constitute almost 30% of our exports. We have to the US, we are exporting almost 30%, and it's a very significant amount. And relationships are not built overnight. It's over the last 30 years, relationships have been built by customers, and it's not easy to build a new relationship. We are talking of building new relationships, but it will take time. So nonetheless, it is going to affect in a big way the Indian textile and apparel industry. As you've rightly put, we are the second largest employer of workers, and this puts more pressure on the workforce also. So no quick fix solutions are there, except we would urge the government to help the exporter to the best of its ability. And that's where, we would really like to keep the relationship, because how much ever we say that new markets, new thing, it is going to take time. It doesn't happen overnight. For the sake of repetition, I'm saying that. So immediately, we will need some support from the government.
We will address that, Mr. Mehra.
Yeah.
You spoke about relationships which have been built over, it takes a long time, right?
Yeah.
From a perspective of buyers, right, importers of Indian apparels and textiles, etc., how quickly do you see global buyers shifting orders to Bangladesh, Vietnam, because of this, because of the fact that, maybe goods from India have become uncompetitive?
Not overnight. I would not say overnight. See, because each one has capacities which I'm hoping are all full up, setting up new capacities. It's going to take time. And there is no reason that, of course, on the long run, they will look for relationships if we are more expensive. But I repeat, I'm hopeful that in the next few months, things will ease out and we'll come back to normal. So overnight, nothing is going to change, except that the Indian exporter will have to share the burden. And for that reason, we seek government support to help us, a relationship that we have built over the last 3 decades, 4 decades, so that we can maintain that.
Of course. Mr. Mehra, for goods which are already being sent out and they're already on the seas, and they reach US before the 17th of September, I think has a lot of pre-export happened to kind of avoid this deadline?
Yeah. I was reading this morning only that the number of containers which have been shipped in the last 10 days is much higher than what was done what is the overall average. So everybody's trying to do whatever they can. It's not that the US buyer also is happy with what is happening. Everybody's trying to hedge themselves as much as they can.
Yeah. So okay. But any fresh kind of orders, etc., obviously, right? It becomes a problem for already.
Yeah, that's on hold. That's on hold. We are negotiating. A lot of our exporters have already left for the US, trying to negotiate with the customers and see how to go forward. See, it's a wedding. We all need each other. We cannot just throw away each other overnight, right?
Yeah.
It's going to take time.
Yeah.
And I think the only way is we need a little hand holding. And I'm not so pessimistic that things will become very bad. See, after all, the dynamics of market demand and supply will play. The buyer in the US knows that Indian price, let's say with the tariff is $150, right? For example, I'm just giving, and Bangladesh is at 120. Bangladesh is going to try to extract their pound of flesh also. They're going to try to get something more because they know the competitor is not going to come less than 150. So, some midway will be found. And of course, if things change, tariffs go away, it will be very nice.
Yeah.
I hope you've understood what I'm trying to say.
No, yeah, absolutely. I do. Yeah, it's a,
It's not only doomed, it is doomed.
No, it is not. I was,
but we expect that.
When the 50% was announced, I was saying, I was on air that morning, I was saying, well, it won't, probably we'll get it done before this takes effect. And this 50%, we'll never see 50.
Yeah.
It'll be 20, but we've seen 50. But
yeah,
now.
I'm saying.
Yeah. But I'm just saying, I mean, of course, 50% can't be permanent. So at some point, this 25 will be knocked off. In what shape, form, etc. Maybe a combination of things, and that gets us to be able to do that. Let's hope it's sooner than later, because the longer it lingers, more the impact, right? And then that's the thing. I'm going to come to you. Let me get my other guests into the show as well. And thanks for joining us, Suvankar. So US is, of course, the biggest market, right, for your industry as well. How damaging will a 50% duty be to jewelry demand from India? And again, I mean, the question is something similar. Are we looking at a freeze in fresh orders?
So what Sir was saying from the textile sector, what we have been seeing in our industry for the last 2 months before this whole tariff increase happened is, people were getting their orders delivered, because we must keep in mind that as much as we are getting impacted right now, there is also the season for the US coming up for Christmas, and the buyers in the US also needs to plan their plan, so that before their festive season comes in, they should have enough inventory for them to do business. So it's not only that we, in our industry in India, we are facing a challenge, but it is also a very uncertain situation for the American buyers as well. And from our side, from a business perspective, we are trying our level best to closely work with the American buyers. Ultimately, business should not get affected. Yes, these hindrances of short-term planning, and suddenly there is a huge order and that has to be delivered within a timeline, and again there will be a gap. So these uncertainties continue to prevail. But from our industry perspective, we are closely working with the buyers in the US. It is unfortunate that the policies at the government level. So we are with the government. We understand that we should not, for the national interest, we should not hurry into things. We need to be patient. But at the same time, I think that from a business perspective, both countries needs to understand that business is what will keep us together. So the balance has to be very critical. But yes, short term, we have our domestic festive season coming in. So as far as the capacities are concerned, we are trying our level best to utilize the capacity for the domestic demand, grow the business, look at other markets, so that we are not dependent on the US as much. But at the same time, our efforts, a lot of our exporters are currently in the US with their customers and trying to understand the situation at the ground level. So I think we hope to have a positive result.
Yeah.
We don't know when, but if you ask me, we by mid-September, things should look better than what it is today.
No, you're saying with regards to the tariffs as well. I mean, lower tariffs.
With regards to tariff, because if you really look at it, if you have Christmas coming in December, and everything, the people need to place orders for Christmas, for their Thanksgiving, and the various occasions that they have in time. So while there has been a lot of deliveries that have been done in the last 1.5 2 months, but for the season, I think that even they will need to have a clarity, as in the US buyers needs to have a clarity as to what will happen. And hopefully by mid-September, end September, worst to worst, the things should clear out and we should look positive. But for now, things are uncertain.
Suvankar, for gems and jewelry, who are the big competitors for us?
See, there is China, there is Thailand, there is India, there is Turkey, there is Italy. Yeah. We have been one of the biggest exporters, especially to the big stores like Walmart and Kohl's and the big departmental stores. So and that has been our strength. Even when it came to diamond, we are 90% of the cut and polish of the diamonds are happening at our end, and they are dependent on India as much as we are also dependent on them. So there is a huge interdependency.
In
So
terms of, yeah, no, absolutely. In terms of jobs, how many people are employed in the sector, Suvankar, in India?
There is, the exact numbers. I wouldn't be able to exactly tell you, but there is more than, 10 lakhs. If you look at jewelry manufacturing, if you look at diamond cutting and polishing, so more than 10 lakhs people are employed. So for them, a part of it can be catered by the domestic demand or the other markets that we are looking into. But 35% of the exports that we do is in the US. So there is this risk of this 35% that needs to be taken care of. And that is where we need to all work towards. And then,
And the
yes,
bulk of, most of this is concentrated in places like Surat, Gujarat.
Surat, yes. When it came to diamond cutting and polishing, most of it is in Surat and the surrounding areas of Surat. When it comes to the jewelry manufacturing in diamonds, it is mostly in Mumbai, partly in Delhi, and partly in Surat. So it is them that will get affected. But I guess that we are hoping, and we are also appealing to the government that yes, while our interest needs to be protected in this time, but obviously the national interest is more important than the interest of what we are. So we are with the government, but at the same time, we hope for a positive result soon.
Yeah. Can I just, Mr. Mehra, ask you about jobs in the textiles sector? How many, what are, and I don't know if there is an estimate, but how many jobs are vulnerable? Because if this lingers on, say, let's just for the sake of, and I'm sure it won't, but say in 3 months, how many jobs are vulnerable because of this? In your sector?
In our sector, if you put the entire textile value chain, we are today almost 40, maybe about 3-4 million jobs will go right away. Yeah.
30-40 lakh jobs.
Yeah.
Okay. And what's the total strength of the workforce in the industry, sir?
4 crores.
Okay.
4.3 or something like that. The exact number is like that.
Okay, so these are very large numbers that we're talking about, of course, here. But these are, of course, estimates at this point. Allow me to take a quick commercial break here. What I will do is I'll come back and ask both my guests what kind of help, because there is some urgent need to some hand-holding, as Mr. Mehra put it, which perhaps is required, right? I mean, during COVID, etc., we had those measures, temporary, and then, of course, but that helped the support. What specifically can be done sector-wise? So we'll do that. Take that break. I just want you to listen to, I spoke with Ramdev Agarwal of Motilal Oswal earlier in the day. Just want to play out a small sound bite. Take that break, and we're back.
If it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms. And so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at isolated things, let's look at it, what will be the impact on the earnings? Because the earnings are what is going to drive the markets. If we have, say, 25% deal in next 10, 15 days or month or whatever, I think market has already calibrated that particular kind of thing. And the whole world is paying. It's not that we are only paying 25%, nobody else is paying.
Welcome back. You're with us here on the Global Reset. 50% tariffs on Indian exports to the US. Rakesh Mehra is representing the textile industry. Suvankar Sen is with us. He's representing the gems and jewelry sector as well. We were talking to both of them about what kind of impact the respective sectors are going to see. Let's come to some urgent help remedies which the government can do. Mr. Mehra, let me start with you. What exactly can be done to provide immediate relief? Because time is of the essence.
Yeah, exactly. Like I said, we need help so that our hands are strengthened to go down and negotiate and book new orders, right? So now there are things like interest. The interest rates in India are much higher. If we can get the interest subvention going on for some more time, then we get remission of our taxes, which we pay indirect on our exports. That is RODTAP and ROSCTL. So we would request the government. We are already in touch with them. We're requesting the government to increase that to some extent. And then, of course, another issue which we have in India is the raw materials in India are expensive compared to our global competitors. That's like, okay, we need our fiber security here. We need to protect the farmers so that the cost of cotton is contained. So I think government has to take measures to ensure that we merge into the global value chain, and that will not only bring our costs lower, but also bring more and more opportunities to us to sell to new markets. And competitiveness is the most important thing today, I would say, and some support, financial, fiscal support from the government.
Yeah. I got that. Suvankar, same question to you.
Yes. So one thing, I would like to correct when I said 10 lakh workers, the 10 to 12 lakh workers are only associated with the diamond cutting and polishing. When you look at the overall jewelry manufacturing, then it is about 40 to 50 lakh workers. And our estimates go that with the 35% export dependency, directly about 12 to 15 lakh workers will get impacted. So that's the kind of detailed challenges that we are looking at. And from a government perspective, I think the first thing we need is, in any form or in any way, we need to ensure that our workers who would be unemployed or not getting the jobs for this uncertain times needs to be protected. So any kind of special financial support to protect and preserve the skill and the art for these karigars and the workers will be very, very important for the industry. The financial support from the banks, because with exports getting impacted, the banking system is also finding it a big risk, and how we can assure through subsidies or through the extra supporting that the government will be able to do to the banks, that they need not worry in the short term, because the banks are the ones who would get worried on the cash flows. And I think thirdly, for the industry, while we are we are hoping for a positive outcome, but like the way we've been doing a lot of FTAs, we have one with UK and then with SEPA in the Middle East and Australia. I think it is very important that we start getting into more free trade agreements with many more countries, so that our markets also utilizing this opportunity, we look at increasing collaborations and increasing our market that we have across the world. So I think in every challenge we need to look at the opportunity, yes, but the government is supporting us in any way, but financially the support will really help in preserving the workers and in sustaining the business in these uncertain times.
That was very well articulated, both of you. And I'm sure that the government's listening, right? And
Yeah,
we will.
they are listening.
Yeah. I mean, the best thing is if we don't need any of this and this gets resolved. And it's been so ad hoc that it's entirely possible that we've seen deferments of tariffs with other countries. So nothing is written in stone. And I think Mr. Mehra alluded to that right in the beginning. It's like a roller coaster ride. So we'll see what happens. But if this is here to stay, I hope there is help coming to the worst affected labor-intensive sectors like textiles and jewelry as well. Thank you both for joining us. We will continue to lean on your expertise over the coming days, weeks, as we track this story and where this goes. But for now, it's thank you from all of us here. Thank you. All right. We're going to wrap up on this edition of the Global Reset. I want to just leave you with a quick soundbite from Jahangir Aziz of JP Morgan. His view on the impact of tariffs. Got this opinion earlier on. Listen in, take a break. Programming continues right here on CNBC TV18 Prime.
I think it is much better to look at the sectoral impact. And I think the sectoral impact is where it matters, and it matters a lot because the impact over there can be significant. 2.4%, roughly 20% of India's exports goes to the US. There are certain things that are exempt from the 50%, which is electronics, which is fuels and pharmaceuticals. That brings it down to about 1.7, 1.8% of GDP. If you take the value added of it, i.e., if you take the import content of that, then the impact is about 1.1% of GDP. If you are going to get a impact coming from the 50% tariffs, and this is going to get concentrated on sectors like seafood, sectors like textile, sectors like non-electronic manufacturing, gems and jewelry, then the impact on employment is going to be significant. The current account deficit is likely to rise. I mean, it's going to go probably 1.5% of GDP if the impact of the 50% tariff is significant on exports. But I think more than the current account impact, I think the impact is going to be on FDI. FDI over the last 2-3 years, after peaking in 2021, FDI has seriously gone down from the $65-70 billion a year down to about $25-30 billion a year. On the other hand, outward FDI has risen significantly, and right now net FDI is almost zero. So India's 1.5% of GDP of current account deficit now needs to be financed almost entirely by portfolio flows.